Are you a first-time home buyer wanting to get into the real estate market? Well, these are the 5 most important things you need to know before making a move. Welcome back to the channel. I'm Steve Ialongo, a real estate broker that has been helping people buy and sell real estate for over a decade. This is such an important topic and I'm super excited to bring it to you, so let's get right into it. Number 1, understanding the true costs of buying a home. Buying a home involves many expenses beyond the purchase price. These costs can add up to 3 to 5% of the actual home's value. So knowing them in advance helps you avoid surprises at closing. Firstly, you will have to have enough money for the deposit once the offer is accepted. Typically, this is about 5% of the purchase price. Then you'll need a down payment minimum of 5% for homes under $500,000 and 10% for portions above that, and 20% to avoid CMHC insurance. Next, you have land transfer taxes. There's a provincial tax, and if you're buying in Toronto, there's also a Toronto land transfer tax. This is typically 1 to 2.5% of the price of the home. Next, you have legal fees, disbursements that cover title searches, registration, and closing paperwork. You want to budget between $1,500 to $2,500 for this. Next, you have title insurance protection against ownership and title issues. This is about $200 to $400. Then you have the cost of a home inspection if you choose to do one on the home. And this generally is about $400 to $700. Some lenders may need you to do an appraisal fee, which could add up to about $300 and maybe $500. And for some properties, you might have to do a property survey, which could cost between $1,000 and $2,000. So those are all the upfront one-time charges that you are going to have to look after. Now you have to look at what are the ongoing costs to own that home. Firstly, you'll probably have a mortgage, which means you're going to have mortgage payments, which are principal plus insurance. Property taxes will have to be paid on an annual basis, which are going to be between 0.5% and 1.5% of the property's value. You'll also need home insurance. Typically, this will run you between $1,000 and $2,000 per year. And utilities and maintenance usually average to about 1 to 2% of the home value annually. And if you're buying a condo, you have to budget for those condo fees as well. So those are all the fees, but now let's talk about incentives and possibly rebates. So there's the first-time home buyers land transfer tax rebate, up to $4,000 for the province and up to $4,475 for the city of Toronto. There's also the home buyers plan. You can withdraw up to $35,000 from your personal RSP, which is tax-free. And then there's the first home savings account, tax-free contributions for first-time home buyers. So that takes care of step number 1. Now, step number 2, get mortgage pre-approval early. A mortgage pre-approval is not a guarantee, but it is essential first step. So what does a pre-approval do? Well, it locks in an interest rate for between 60 and 120 days, depending on the lender, and it protects you if rates rise. It also confirms how much you can afford based on your income, debt, and credit. Helps you focus your search on a realistic price range. Makes you a stronger buyer in competitive markets. When talking about mortgages, here are some key terms to understand. Amortization period, usually this is 25 years, but could also be 30 years on an uninsured mortgage. Term, which is the length of time your interest rate is locked, commonly 1 to 5 years. And then you have fixed versus variable rate interest. Fixed offers stability. Variable may save you some money if rates fall. And don't forget about the stress test. Lenders assess if you can afford payments at the higher of your rate plus 2%, or the Bank of Canada's qualification rate, which is currently around 5.25%. Here's a quick tip. Keep your credit score above 680 for best rates, and don't take on new debt before closing. Hey, if you're liking this type of content, don't forget to like the video, subscribe to the channel, and click that notification bell. Now let's get to step number 3. Step 3 is know the market and location. The Ontario market isn't a one-size-fits-all. Understanding regional differences helps you buy smart. Urban markets like Toronto, Ottawa, and Hamilton Prices are higher and competition is fierce. You may face bidding wars where offers go above asking. Short closing periods and fewer conditions are common. Suburban or mid-sized cities like London, Barrie, or Kingston, more affordable, but prices have risen sharply in recent years. Still competitive, but with room for negotiations. And finally, you have rural or cottage properties. Often, they use wells for water, septic systems, or private roads. All require special inspections. Some lenders may be more cautious with financing, so keep that in mind. When trying to pinpoint an area to live in, you want to look at things like transit accessibility and commute times, school district quality, local development plans like highways, condo towers, or industrial properties are very impactful to value. Property zoning and bylaws are also another important thing to look at if you're thinking of doing some type of renovations or even renting the property. The fourth step is understanding the offer and conditions. When you find a property you like, your agent drafts an agreement of purchase and sale, typically known as an APS. Once both parties sign, it becomes a binding contract. So now let's talk about some common conditions that you will see in an offer. There's a finance condition which lets you cancel the offer if your mortgage isn't approved. A home inspection condition protects you from undisclosed structural or safety issues. And with condos, there's a status certificate condition which reveals the condos corporation's finance, health, and rules. In some cases, some buyers will also use a sale of the buyer's property condition, which allows time to sell your current home before closing on the new home. At some point in the offer process, you will come to a time where you will have to waive conditions. In hot markets, buyers sometimes waive conditions to compete. This carries significant risk. For example, buying without an inspection could leave you with costly repairs. Consult your real estate lawyer before waiving any protection. Along with an accepted offer comes a deposit. This is typically paid within 24 hours of the accepted offer. It's held in trust until closing. If the deal falls through to a valid condition, the deposit is refunded. And the fifth and most important thing you need to know before buying a home is hire the right professionals. Buying a home in Ontario requires several licensed professionals. Here are a few and the roles that they play. The real estate agent represents you in negotiations, offers, and market analysis. They must be RICO licensed. Check their reviews and experience before making your choice. Real estate lawyers handle title transfer, mortgage registration, and closing funds. My suggestion is you choose someone who specializes in the type of home that you're buying in that area. Next, you have a mortgage broker or lender which finds and arranges your mortgage financing. Compare rates from multiple lenders before making your choice. Home inspectors identify structural, electrical, and plumbing issues. Hire a certified inspector. This is so important. Someone who is an OAHI member is preferred. Then you have insurance brokers. They provide home insurance, which is required by any lender. Shop around for the best rate and coverage. Here's another tip. Ask for written quotes and confirm all professionals are insured and in good standing before you make your choice. So to recap, here's the timeline for purchasing a home in Ontario. Get pre-approved, which will take between 1 to 2 weeks. Find an agent and start searching and view properties and attend showings. Generally, this is about a 1 to 3 month period. Once you found that home, it's time to make an offer. If you have conditions attached to it, generally those conditions last around 5 banking days. During those 5 days, you want to fulfill those conditions, which means arranging your finances, do any inspections that are necessary, and review all the documents with your lawyer. Once it's time to waive those conditions, then you have a firm deal. At this point, you want to hire a lawyer, finalize your mortgage legal paperwork, insurance, and transfer funds if necessary before the closing date. On the closing date, you pay the remaining funds, get the keys, and take possession. Usually, this is 30 to 90 days after the acceptance of the offer. And there you have it, 5 of the most important things you need to know as a first-time home buyer looking to get into the real estate market. If you have any further questions, don't ever hesitate to reach out. I'd be glad to help you along the process. Bye for now.